Okay, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we're trading them. Today is Friday, December 23rd, and stocks pummeled, snapping a 2 day win streak yesterday, where we'll see where things are trading today. Tesla getting hammered, just can't catch a break. Traders reacting to the core PCE price index data this morning. This is the Fed's favorite measure of inflation. We'll see where that came in and how the markets responded. Chip stocks down big. We'll look at that. New home sales out as well. Plus, a trade to consider if you're not in AMD or NVDA. We'll look at that using PowerX Optimizer. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and today I'm flying solo, but I'm typically joined by Markus, who is Rockwell Trading's founder. And the two of us, you could say, know a bit about trading. We have a ton of trading experience. We know our stuff, and we're not afraid to tell it how it is. So if you're looking for honest insights into the world of trading, you've come to the right place. But before we dive in and show you our trades and how we're tackling these crazy markets, let's take a look at what's moving the markets today. Let me go ahead and share my screen here. And here we have the S&P 500. Yesterday, a big down day, down 1.5%. The Dow was down 1%, 1.1%, and the NASDAQ down 2.2%. So a pretty nasty day yesterday, but let's go to a 5-minute chart here because yesterday could have been a lot worse. So this is where we started. We gapped lower and we just sold off all morning long, making session lows right at the start of the afternoon session. So trading lower, selling off into lunch, and then making some lows here. And there was a bit of a rebound, and a bit of a rebound is a bit of an understatement because we actually erased almost half of the losses that were experienced. So if you're more of a cup is half full type of person, this is where the cup was half full. With a rally into the close, although it wasn't enough to offset the losses that were seen earlier in the trading session. So an interesting trading session. And today, also very interesting, we see that we actually dipped early on, found some support around 3,800. Looks like this is acting as strong support for the S&P. And we actually rallied, went positive, started to pull back recently. Right now, we're in the red, but essentially flat for the trading session. I do want to go to a 5-minute chart, though. We're going to look at the E-mini S&P and look at this reaction to core PCE price data. Let me go to PowerX Optimizer, pull up the economic calendar, and first look at what was reported. At 8:30 a.m., we see core PCE price index. This coming in at 0.2%, and this was the forecast. So traders trying to figure out what the heck do we do with this information? Is it bad news? Is it good news? And that's what this chart showed. The initial reaction negative, and then we quickly spiked higher, and then we pulled back. And now going into the open, we pulled back, found some support, and rallied. So markets right now all over the place. We could say that at this point, core PCE wasn't enough to really help the markets find any direction. If anything, causing a little confusion. Now, there is another core PCE number that's being reported before the Fed meets in February. So the Fed will have another data point there to look at. People say that it's the Fed's favorite inflation measure because it differs from core PCE or core CPI, excuse me, because it only measures goods and services targeted towards and consumed by individuals, giving some insight into consumer spending. So kind of a nothing burger, you could say, for this morning, although there was some volatility. And we'll see if this dip back in the red is going to hold or not. We could go to a heat map here and see what's going on. There was some green. I'm going to guess that right now. Yep, refreshing it, we see that there is starting to be a little bit of red in the different sectors. Although there are some positive sectors right now, energy's doing well. Google, Amazon up for the day. Apple and Microsoft down, as well as Tesla. So, well, what does that mean for us, and what does it mean for a possible Santa Claus rally? Well, let's let's take a look at this. I found this chart here, and I love charts, and I thought that this one was pretty telling. So saw this article on Market Watch, and if there is a Santa Claus rally, then it would be the seventh in a row. December 23rd today marks the first day of that Santa Claus rally phenomenon. So we've talked about it before in our videos. Technically speaking, although a Santa Claus rally is kind of loosely used as a term for the markets maybe moving higher and rallying in the final month of the year, it technically is measured as this phenomenon that takes place from the last 5 trading days of December and includes the first 2 trading days of January. And we see here that going back to 1950, the S&P 500 averaged 1.32% and was trading higher 78% of the time since 1950. And this is shown visually with this graph. We see all of these green bars. Here are the 6 consecutive Santa Claus rallies that we've seen over the last 6 years. So if we have another one, it would be number 7. There were a few 8 successful rallies. Here we see between 1969, 1970, and 1976, 1977. And actually, the longest, I'm sorry, was 8. So there were 6. This would be the only one other than the 8 consecutive years where we'd be at 7 if this is successful. But look at all that green. I mean, however you want to justify it or explain why it happens, it is a phenomenon. It is something that takes place, and today is part of that 7-day window. So will we finish up on Friday higher? Right now, down a little bit in the red, and we're just going to have to wait and see. Now, speaking of numbers, for the year, things don't look too hot. For the year, the S&P is down 19% right now, and this would be the worst year since 2008 for the overall markets, unless there's just this crazy move that happens over the next couple of days. It would be the worst year for stocks since 2008. So not necessarily good company there with the financial crisis, but we all know what's going on. And it's been quite a year. It's actually been a nice year for selling premium if you've waited for the nice opportunities and you're trading the wheel, at least the way that we're trading the wheel. So happy with the year from a wheel perspective, but it's been a challenging and volatile year nonetheless. Now I want to look at a couple of market movers here. Let's look at Tesla because Tesla used to be such a favorite for many traders. And this run up here, it doesn't get much better than this. $9 to $400 being added to the S&P. And 2022 has not been a great year for Tesla. Tesla is now down 68% year to date, down 29% for the month. Just a nasty move lower. Who would have thunk? Trading at 123.15. Now, Tesla, the selling has really gotten worse this month because of investors concerned with Elon Musk and his management of Twitter. I mean, there's no way around it. There's even reports that some potential buyers of vehicles have canceled orders because of his distraction and not liking his role in what he's been doing there. According to Bloomberg, 10 analysts have cut their price targets on the stock since last week. So that's pretty crazy. On Thursday morning, the company said it was offering U.S. consumers a $7,500 discount on two of its highest volume models before year end. So trying to get some more interest there, maybe getting the sales pushed towards the end of the year. But Tesla right now down again, another 1.8% for the day. So tough to be a Tesla owner, but hey, will we see a bottom here at the end of the year? Looks like we're finding some support around the pullback here that we had in 2020. Still looks like you'd be trying to catch a falling knife with this one, but we could be seeing some activity and some support right around these ranges that we had in 2020 after the split. Chip stocks. Let's take a look at these chip stocks. This kind of took off MU and their earnings, missing earnings, and then announcing that they were going to be cutting 10% of their workforce because of waning demand. Well, that didn't go well for other tech stocks. Now, MU bouncing back a little bit, up 0.8% right now. Finished the day yesterday, 3.4%. I do have a position in AMD. I am willing to hold this. I think that longer term, going into 2023, it's a company that I'm okay owning, although I will admit that it has pulled back more than I expected. I am willing to add to this, but I'm looking to do it strategically, seeing if we see some support. Right now we do not. Yesterday down 5.6%. Markus, he owns NVDA, so we could look at NVIDIA. NVIDIA also a rough day yesterday, down 7%. Now Markus is in a profitable situation right now because of the position that he took back here in October. So he is above his break even, below his cost basis. So far hasn't sold calls. I know that he was looking at 170, maybe 175, but at this point, no calls on NVIDIA for Markus, and he still owns shares of the stock. So NVIDIA down 1.7% right now. AMD essentially flat for the day. So nice to see that there really wasn't a huge follow through after the reaction yesterday. But chip makers definitely having a rough day. So let's look at PowerX Optimizer here, and let's talk about an alternative to AMD and possibly NVIDIA. So here we have AMD, and AMD did show some strikes here for January 6th. So we have a 59 strike. Let me actually do this. I want to go to just this week's or next week's expiration, December 30th. I don't need to go out 2 weeks. So here we have the 60 strike for AMD. It does look like there's some stronger support between, maybe 55 and 57.50 at this point. But this popped up on the scanner. We also have NVIDIA. Much higher strike here. So NVIDIA could potentially pull back and see some support at these lower levels. Chart wise, if I was owning NVIDIA, I'd be happy with this move, but taking a trade on the wheel, we're just not seeing a lot of strong support at these levels. So I would like AMD better than NVIDIA from a chart perspective and what we're seeing here. However, stock that's popped up, and we had a few mastermind traders take this. This is Apple, and Apple. If we look at Apple here, we see that we're encountering support around 130. The nice thing with Apple is there are all of these support levels below, and let's do this. Let's go ahead and go to the calculator, bring up Apple, and look at where we could get 30% on the put side. So right now we could get the 127. We could sell the 127 put, get 31%. We could sell the 128 and get 40%. So there are a couple of nice strikes here where you get some really nice premium. This is not investment advice, but I think Apple is a great alternative to NVIDIA and potentially AMD. Now I want to go to the asset correlation tool here though, and just show why I am not taking Apple, even though I like the chart, even though it's giving us some really nice premium at these lower strikes. What we have here is the asset correlation tool. And for the positions that I am in, AMD and Google, they are highly correlated. And I did take Google. I want to say at the time it was mid to high 60s. So it wasn't as high. And that's changed since I've been in the Google position. I want to say it was about 60.66. CTRA, the other position that I'm in, this is actually working out just fine, and we see that this is it has a very low correlation. So when we look at the correlation tool, a reading of 1 is a perfect correlation. It moves lockstep, same exact way. A reading of -1 has a perfect inverse correlation. So if a stock's up 1%, the inverse would be down -1%. And what we really like to see are stocks that have a correlation of zero point 0.5 or less. 0.5 to 0.65 is kind of my warning zone. 0.65 just means that the stock has the same magnitude, the same type of movement. So the concern here is that with our portfolio, we, in theory, could experience more risk, because if everything's moving together, then you're really living or dying by the direction of that correlated portfolio, right? So if everything's up 2%, you're happy. If everything's down 2%, you're not having a great day. And even just with these positions here, we see that, okay, AMD right now is flat. So, well, I'm actually down a little bit on the day for AMD. CTRA is up 2%. Google is up 1%. So we have different types of reactions rather than just everything moving together, like NVIDIA, AMD, and in this case, if we look at Apple, we see Apple's down 1%. So NVIDIA might be the bigger loser of the bunch right now, but they're all down, and having a less correlated portfolio can really help balance out the risk. So for me, it doesn't really make sense to add Apple, even though I think Apple's a solid company. I think that we're trading at some nice prices, and the wheel scanner and puts, if you're starting the wheel process, I think that there's some nice premium at the 127, that is, maybe 128. I know that some traders took the 130. I would have considered that. And for anybody that got the 130 or 131, we'll see if you get assigned based on where the stock closes at the end of the day. So that's one that I would be considering if I wasn't already in correlated positions, and we will see where things go. So markets mixed again. S&P now flat, up a half a point. The Dow up 21 points for the day. The NASDAQ down 44. But overall, not a whole lot of direction either way. We'll see if this first day of the Santa Claus rally period is positive or not. Now, just a heads up, next week, markets are closed on Monday to celebrate the Christmas holiday. Tuesday, Wednesday, Thursday, Friday are trading days where the markets are open, but generally speaking, this is a very quiet period without a whole lot of volatility or volume, and we're taking that time off. So no stock market updates next week, and we will be back here in 2023 with Markus. So thank you for all of you who watch our videos. We really appreciate the viewership and joining us every day. I'd like to know where you think the S&P 500 is going to end up at the end of the year. And my guess, this is not a high probability trading decision, but my guess is that we do get a Santa Claus rally, and I'm going to say that we finish at 39.25. So that's my guess. I'd like to know yours. Maybe we'll give the whoever gets closest to the actual close at the end of the year. Maybe we'll give you like a trade what you see, not what you think mug or something like that. Have fun with it. So post your prediction for the S&P. Where do you think it will end up at the end of 2022? We'll see who the winner is, and we'll be back here in 2023 with more stock up. Start. It's the end of the last video and stock market update of the year. So I'll leave it at that. Happy freaking trading, everybody. Have a Merry Christmas and happy holidays for everyone. Have a great New Year's, and let's make some money in 2023. Take care, everybody. Happy trading.